Governance principles in strengthening business trust and sustainability. Corporate governance principles are often referred as requirements and recommendations prepared by the supervision authorities or international professional organizations only for the publicly listed, the state-owned, and the big multinational companies. However, following these principles far beyond the prescribed compliance requirements is important for all market-driven economic entities due to establishment and maintenance of trusted business relations. Trusted business is highly substantial for all stakeholders, such as the owners and investors, the employees, the customers and suppliers, the creditors, and the authorities and associations of public interest for social, economic, and ecologic sustainability. As the aware business risk-taking is an essential element of the economic growth and innovation, it is definitely stressful how the involved parties grease the skids for successful management of uncertainties affecting business goals like operational, environmental, legal, societal, human health risks in either micro or macro environment. The lower is the level of business trust measuring acceptance and undertaking of unavoidable uncertainties in business relationships, the higher is the cost of risk-taking due to mistrust, like in the form of higher interest rates, insurance, and enforcement costs, which leads to lower efficiency and competitiveness by the unsubstantiated increase of operational costs. It is important to all economic and social partners that the enterprise governance milieu, by keeping in mind all the needs and requirements of the market's demand and supply relations, the regulatory environment enforcing public societal interests, and the company's stakeholders' expectations together, supports the optimal framework of risk-taking in establishing and maintaining long-term and fruitful business relationships necessary for the sustainable development. Therefore, it is desirable for the achievement of a standard level of business trust that those governance principles and enabling practices which are commonly interpretable and observable by all types of economic entities will be as widely as possible acquainted and also applied according to the specific business conditions. Implicitly, the enterprise has the more and the more types of business relationships and stakeholders, the more important is the control and transparency of its governance system supporting business trust. Nevertheless, the successful conformity to governance requirements and the credible presentation of the achieved results are equally important to the entities either in startup, growing or matured phases, independently from size, industry sector or ownership types. For publicly listed companies, the regulators or supervision authorities request compliance to the local corporate governance codes or recommendations. In Europe, the comply or explain type disclosures are generally accepted. However, stakeholders would be more happy with wider transparency of how the fulfilled compliance objectives are achieved, instead of just receiving short explanations of why some compliance requirements are missed or managed in different than the recommended way. Small or medium-sized enterprises are typically not requested to disclose conformity statements. However, if their products or services are embedded into their customers' production lines, the necessary technical, quality and financial indemnity insurance requirements and the validation processes are established and maintained within formal supply chain management. In outsourcing business, even the small entities might be asked to provide independent audit reports for service organizations' control. Funding agencies, investors and financial institutions can rate their potential SME clients not only based on the historical financial figures, In optimal business environment, the soft organizational management factors and company goodwill are also evaluated and important for decision making. For these reasons, even the SMEs can benefit from presenting their governance capability conforming to international standards without exaggerated implementation and assurance costs by adapting the governance model for trusted businesses aligned with their own business goals and environment. Most of the given governance processes and necessary practices don't need to be implemented in different or new way from existing company management practices by linking existing already proved management practices to generic governance objectives for better achieving transparency to external stakeholders. Enterprise goals-driven integrated assurance management scenarios. The suggested solution describes how integrated assurance management scenarios can be established by mapping already existing or newly developed management practices to governance objectives through company-specific enterprise goals. By this way, the compliance and assurance works will be aligned with the enterprise-specific business objectives and might keep the less meaningful elements of general governance or control frameworks out of scope. However, by comparing existing practices to those offered by these frameworks, the management and, if requested due to company size or corporate laws, the supervision bodies might benefit from getting wider professional knowledge and best practice suggestions for improving enterprise governance. The proposed integrated assurance management scenarios are distinguishing different operational and organizational levels, having specific targets and time horizons. Each level defines usefulness and efficiency goals and measures, allowing management to see recognized professional framework practices as enablers instead of just compliance requirements. The following integrated assurance management scenarios are presented in this case study handbook. Managing operational performance. Managing performance reliability. Managing operational effectiveness. Managing strategic directions. Managing operational risks. Operational performance is related to the core and supporting business processes of a business unit. The processes might be described by using different methodology and tools. However, the process purpose and the necessary and sufficient outcomes of achieving this purpose are generally identifiable. Each specific business operation consists of a set of interrelated business processes with allocated resources, specific product or service delivery requirements and schedules. Managing operational performance scenario is focusing on achievement of these relatively short-term performance objectives, for example a unique product or service delivery based on a specific client's order. Most regulatory requirements like health protection, safety, human rights, technical or accounting standards might be also incorporated within activity goals and assured at this level. Performance reliability also refers to the above operational level with extended focus on additional aspects of performance. For repeating, parallel or extended cycles of operational processes, the operational management should establish longer-term objectives such as customer retention and capacity utilization. At most cases, these objectives are related to contractual or payoff periods. For example, customer satisfaction and capacity utilization rates are applicable measures for recurring business transactions for the monthly payoff period of an outsourcing service. such as the operational performance instances drive the achievement of reliability objectives, the payoff cycles-based reliable performance drives to achieve entity-level operational effectiveness goals measured by profitability and agile resource allocation at business unit level for a quarterly or yearly reporting period. The business unit level effectiveness is also a driver to achieve objectives set by strategic directions, business goals, like revenue targets and operational cash flow positions set for the strategic planning periods. Managing operational risks sets risk tolerance, acceptable deviation from objectives, and risk appetites, affordable levels of uncertainties affecting objectives, for operational and organizational levels based on operational performance, reliability, effectiveness, and strategic objectives. Each level's objectives have specific time horizons, therefore the application of traditional consequence and probability metrics for risk ratings and selecting or prioritizing the risk treatment options is reasonable only when operational or organizational levels and timescales of risk events are comparable. Risk management practices might show significant differences in details at SME or bigger company cases. However, the same principles remain valid. Evidently, a small entity or business unit also defines acceptable tolerance levels of its business targets and establishes its governance structure adequately to affordable levels of internal and external uncertainties affecting these targets. Practically, affordable level is different for a smaller entity with a few service or production lines than for a big multinational company with much more diversified activities. The governance model for trusted businesses keeps both enterprise management and assurance logics in mind by presenting governance processes in line with the objectives relevant for enterprise management, together with an exact mapping to processes of control frameworks reference models, accepted and used by assurance providers for compliance attestation. The governance model aims 11 governance objectives. While business sustainability objectives are significant for keeping business operational, economically effective and successful, the organization's internal control objectives has the major focus on how effectively internal control system is enabling achievement of strategic operational effectiveness, reliability and business process performance related enterprise goals. Each governance objective should be determined in context of the specific organizational or operational level by considering the adequate time horizon. The governance objectives should be supported by usefulness and efficiency measures and other risk criteria for improving business processes and management activities within the enterprise governance framework. Linking governance objectives to enterprise goals. The governance model for trusted businesses and governance capability assessment help the executive management and, if it exists, the board to look at compliance issues through customized governance objectives aligned with enterprise-specific business goals and stakeholders' expectations. The governance model for trusted businesses provides descriptions and applicable practices for the governance processes supporting management sessions and assurance reports on effective risk management and control over trusted business operation and financial reporting, enabling achievement of enterprise goals according to stakeholders' needs and expectations. The governance capability assessment is used to evaluate these management sessions established by integrated assurance management scenarios implemented at different organizational and operational levels. Governance capability assessment. For implementing enterprise governance, the executive management and, if it exists, the supervisory board should follow scenarios to evaluate, direct, and monitor business operation in alignment with the adopted governance objectives. In this term, the enterprise governance is driven by the organization's specific business goals and enabling governance objectives instead of generic control or regulatory framework-based checklists. When ISO IEC 15504 standard-based governance capability assessment concept is applied, the evaluation of compliance will focus on how the capability profiles of the implemented core business and governance processes are aligned with the governance objectives customized for the enterprise goals. This customization keeps in mind three dimensions: the business operation, processes and activities under scope, the applicable governance practices from recognized reference models, and the capability level targets. By using governance capability concept in customization of governance objectives, the management is able to present management assertions in alignment with both business-specific and generic requirements. These assertions are linking business activities to governance practices within the applied capability assessment model, supporting both the implementation of the enterprise governance framework and its internal and external evaluation. The selected processes from the COSO, COBIT, and the Enterprise SPICE reference models associated with the process attributes defined in the ISO IEC 15504 provide a common basis for performing assessments of governance capability regarding enterprise governance and reporting of results by using a common rating scale. ISO IEC 15504 offers not only transparent method for assessing performance of relevant governance processes, but also tools for assessing related risk areas based on the gaps between target and assessed capability profiles.